again, I look at it almost like keeping the patient alive by injecting them with just drugs and drugs and drugs. Well, now the drugs have run out, and this patient is ready to flatline, right? So I think we are headed a lot lower. Doesn't mean you're not going to have amazing bounces in the bear market. Bear market rallies are called rip your face off rallies.
This is very rare. After you get a volume breadth thrust,
it's going to create a recession in profits.
Is there a chart that you look at as more of a leading indicator? All right, guys, so welcome to this video. We have here trader and analyst Gareth Soloway. Gareth Soloway has been a trader and analyst now for over 20 years. He's had plenty of experience in chart analysis, and I've been talking with him in this particular interview about technical analysis. It's been quite fun. Gareth, how are you doing, by the way?
I'm doing really well. Thank you for having me.
Let's talk about the stock market. And this is obviously important even for people who maybe have no interest in the stock market, because there's, as you say, there is a correlation, there is a link between stock markets and crypto and Bitcoin. Both of them, both Bitcoin and stock markets, seem to be a risk asset class. The stock market most recently broke. I mean, first we had this massive rally from about 3,800 after almost a 20% drop, and then collapsed very quickly below, which apparently, according to statistical data, in fact, Jason Gephardt of Sentiment Trader, he recently said this is very rare. After you get a volume breadth, because we had a volume breadth thrust, which is essentially, for people who may not know, volume breadth thrust is when you get 3 consecutive days of 80% advancing volume going into advancing stocks. And then for it to collapse again, it's extremely rare. And we broke structure, we broke support, Gareth, as I'm sure you know. A lot of the data is now suggesting we could potentially be in a bear market. I want to know what your thought process is. How do you assess the charts? And what do you think about the whole situation?
Yeah, so I do think we are in a bear market. I think that you have a scenario here where the Federal Reserve since 2009 has basically been printing money, and they tried in 2018 to kind of take it down, and then the market freaked out and they came right back in with lower interest rates, more quantitative easing. And then obviously we know when COVID hit, they really went guns blazing. I mean, just the amount of money printing was incredible, right? So you now have this scenario where prior to 2021, inflation was around 2% or under, and it enabled them to print whenever they wanted to. That created this false sense of security in the market. I know we went through a period where the biggest drawdown for like a year was 3%. I mean, it was ridiculous. You now don't have that stopgate, right? We don't have that security of the Fed rescuing us, which does to me mean that it's the reckoning point in the market, right? So at least until unemployment rises substantially more than inflation, and then maybe I think the Fed will flip back to money printing again eventually, because that's what they know and that's how they do it. But I do think that we're at a point where you have to be ready for a longer term bear market, because the Fed kind of pulled forward a lot of the gains for years with the stimulus that they were doing. So it's almost like, again, I look at it almost like keeping the patient alive by injecting them with just drugs and drugs and drugs. Well, now the drugs have run out, and this patient is ready to flatline, right? And you have that scenario in the market. So I think we are headed a lot lower. Doesn't mean you're not going to have amazing bounces in the bear market. Bear market rallies are called rip your face off rallies for a reason. Yeah, so I mean, they are just incredible, but you need to be more of a trader now. This is a trader's environment versus the last 10 years. You could have just gone long and shut your computer off and you'd be very, very wealthy, so.
And here's a question. So some data that came out recently, I think some statistical data I look at. I mean, unfortunately, I'm a bit of a nerd, a bit of a geek for these data stuff, but some of this suggesting that we are now in an environment, a sell the rally environment, not a buy the dip environment. Is that something you agree with?
I do agree with it. Yeah. And I've adjusted my trading a little bit where, number one, I'm more careful on my buys. So if I'm buying at some technology beaten up stocks, like right now I'm playing around with little Carvana, right? I mean, it's down to a technical support level. It has 50% of its float short. So, I mean, there's potentially, if we get a rally in the market for a few days, potential short squeezes there. But I think the key is you have to sell into them. You can't look at this market, at least I don't look at this market and say, well, we're going to go back to all-time highs. I don't think that's happening for a long, long time. And you can already see that we're making lower highs in the market and lower lows. That's a trend. You have to pay attention to that versus what we saw in 2021, 20, 19, 18, and so forth on. So you definitely have to be more of a sell the rip type trader versus a buy the dip and just buy and hold.
Let's have a look at the chart if you don't mind. But by the way, which chart do you look at the most? Is it the S&P? Is it the Dow? Or I know you probably look at a whole bunch of them, but which is your go-to chart, for example?
Yeah, usually the spiders, the SPY,
Yeah.
so the S&P, mainly because it's 500 stocks, right? So you're getting a broader kind of view of the overall market. Remember, the Dow is 30 stocks, so it's like, I mean, basically it doesn't give you that much insight into what the overall market is. And the NASDAQ is so controlled by 5 stocks that the NASDAQ 100, I should say, that you just have to be aware of that. Like 50% almost of the weighting of the NASDAQ 100 is 5 or 6 stocks. So I do like the S&P. It gives me a little clearer picture of the market.
And by the way, just out of curiosity, is there a chart that you look at as more of a leading indicator? Some people have suggested, I know the guys at the Dow Theory, they like looking at transports, Dow Transports. Some say IWM or Russell, the small caps. What about yourself? Do you have one chart which you look at as more of a leading indication?
I do pay attention to the Russell. I think the transports, it's a little old school now. I think it still is worth keeping a note on, but the Russell to me definitely is something that I pay attention to, because basically that's spec money, right? Speculative money. So if you start to see the Russell outperforming, it may mean that smart money is starting to accumulate riskier assets. Eventually you get the secondary tier buyers, the third, the fourth, the fifth, and then eventually the retail buyer to kind of chase that sort of thing. So definitely the Russell is worth kind of keeping an eye on. In fact, if we go to the IWM chart, I think it's worth noting here, and I have a bunch of trend lines, but the Russell kind of gave us a heads up that the markets were going to curl over, because if you go back to October of 2021 here, you had this kind of failed breakout, right? And I don't know if you probably pay attention to these, but I've always learned that failed moves can result in the biggest opposing moves. So you had this breakout on the Russell, and then it promptly failed, and then you could see what happened. And if you go to the NASDAQ 100, right, you can see the NASDAQ 100 here, it was actually in November when it topped out. So it was almost a month later than the Russell. Same thing with the S&P 500. So it really was, I think it was a good indicator. Not a lot of people wanted to believe it, but again, this is what traders do. They don't put 100% stock in anything, single thing, but they're always paying attention.
Yeah. Well, actually, now you're here on the NASDAQ chart. Where do you think that the NASDAQ is heading in the next several months, or even the spiders for that matter? Where do you think we're heading for the next several months of this year? Perhaps by the end of summer to September, October?
Yeah. So I'm just cleaning up the chart a little bit from all the drawing that I do on the chart. For me, this is where the NASDAQ's heading. So I think the S&P is the same thing here. I'm basically looking and saying, okay, the Fed is withdrawing all this liquidity. Oil prices are crushing globally people, right? So you're having this kind of demand shock where people are probably pulling back from traveling and buying things. Inflation, it's going to create a recession in profits. And you already have a market that is still above where we were pre-COVID, and the Fed is raising rates higher than we were going into that. They're doing all these things to kind of slow us down. So in the very least, we're headed down to that pre-COVID high. I think there you get a sustainable bounce at least, but ultimately I'm in the camp we're going to go even lower before all is said and done.
Yeah, and just to be clear, I think what you mean is this is not going to happen in one day or in a week. It's more of a time sequence. This is going to happen over a period of many months or weeks.
Yes, and I think, and just look at past cycles, right? So even in 2007, we topped out, and then 2008, it didn't bottom out for 12 to 18 months. This one may be longer, and I do worry about that for investors that are investing longer term, is they may find that because if the Fed doesn't come back with stimulus and significant amounts of stimulus, I could see the market being in a kind of a low end range for a long period, like multiple years.
Before we finish, Gareth, tell us what are some of the things that people can do to learn more about you and also get involved with your trading. I know you have your website, inthemoneystocks.com. What can people get from that? Yeah,
so basically I have a service there that is a subscription service, and on a monthly basis, I do a video every single day. It's basically 100% psychology of the markets, of trades, of technical analysis. And then I put out basically trade signals. So if I see a buy signal or a short signal, I put that out real time, and people can kind of follow those if they so choose. And then same thing for Verified Investing Crypto. It's a new website I started last November, and it's just cryptocurrency. So I've been guiding people through this wild crypto market. We've been doing pretty well, and they get a daily video just on crypto and trading and price action there.
Gareth, it's been an interesting interview. I'm actually glad that there have been a lot of times when there's been a meeting of the minds there. But even if we don't agree, that's okay. That's even better because that becomes interesting as well. Gareth, thank you so much indeed. And thanks also to Sarah for setting this up, for arranging this, and also thanks to Steve who put me in touch with you.
Yeah.
Really appreciate it, Gareth.
Yeah, it's been a true pleasure to talk to you. I hope we get to talk again in the future.
Absolutely, yeah. And let's see what happens in the next several months. Might be an interesting situation we're in the next several months. Thanks, Gareth. Really appreciate it.
Thank you so much.